Um, so thank you all for being here. My name is Stephen Davis. I'm with the Community Investment Collaborative. Us, along with the Central Virginia Small Business Development Center and First Citizens Bank, are happy to host this workshop on how to finance your business. And this is kind of part one, preparing for loans and microloans. We're going to hit on today. We're losing people already. I'm boring people. That can't be good. The kind of goal today, we're going to talk a little bit about just banking and kind of preparing yourself for that, and then preparing yourself for financing your business and things you need to think about. So with that, I will let, we'll kind of introduce ourselves a little bit, and then we'll jump into the workshop. So Rebecca, you want to share a little bit about SBDC?
Sure. So I'm Rebecca Haydock, and Linda Tuberty is with us today. We're both from the Central Virginia Small Business Development Center, and we're actually housed in the same location as Community Investment Collaborative. And we provide assistance to businesses in pretty much every aspect of your business. It's free of charge. We have 8 professionals in the office that work on everything from bookkeeping to finance to marketing to getting your business online, helping you find ways to connect with your customers. We'll do market research to help you find your customers, you know, where they are. If you're interested in government contracting, selling to the state, you know, which could be UVA or locally, pretty much every business topic. It's like having a group of personal business advisors, and you know, all with different areas of expertise. So that's who we are. And Linda, I'll let you talk for a minute. Linda is our events coordinator and helps us put together many trainings and opportunities to learn different topics across the year.
Hi, everybody. Yeah, I don't have too much to add to that, except check out our website. We offer a lot of different classes. We're doing some new things, some boot camps where you have one-on-one appointments afterwards with the instructor if you register. We do government contracting. We just have a variety. So I will put in the chat box our address, and if people want to check out the events, please feel free. And we're doing a second one of these next week, same time. So join us for that one as well.
Thrilled to be a part of this workshop to kind of share a little bit more about things you need to be prepared for and financing your business. So we're happy to make this available to you today. We will share information on our website so you can find more information about us or how to contact us in the chat box. But for now, we will keep moving along so we can introduce First Citizens. So our co-sponsor with this event is First Citizens Bank, and we have Brian and April with us. And Brian and April, you want to introduce yourselves?
Be happy to. I think first of all, I can introduce the bank to you all. First Citizens Bank was formed in 1898, and as you can see here, is the largest family-controlled bank with $39 billion in assets in the United States. And I think that gives us a lot of strength to address the needs of clients in their path through personal and or businesses as they grow those. And I'll let April introduce herself and then a little bit more about myself.
Hi everyone, my name's April. I've been with First Citizens for 10 years now and banking for over 14. And I handle financial services here, but been in every position from teller to operations to now financial services. So I can help you do it from definitely personally as well as business wise. And I love, you know, working in this industry because you get to meet different people from all different backgrounds. So nice to meet you.
A little bit about myself. I've been in banking, I hate to tell you this, 39 years. You can see a little gray hair and a little losing hair through all these challenges we've had in 39 years. But the last 2 years, I'm celebrating with First Citizens. I've been with 3 other commercial banks in Virginia this whole period of time, and have continued to be in commercial lending and or market president at some of those banks. So that sort of gives you a little bit of flavor of where I'm coming from. So thank you.
Great. Well, and thank you to Brian and April for helping us organize this. we're going to jump in just a second with First Citizens to talk about financing and banking a little bit, but just for everyone's sake and the participants, if you have a question, please you can include it in the chat box, or also if you were to click on participants on your screen, there's a place where you can raise your hand, or you can kind of send us a note if you need to. Since we have the slides up, we might not be able to see you if you're saying something, or if you're kind of trying to get our attention. So if you need to, feel free to unmute for a second and say, I have a question. And so we have a small enough group that I think we can accommodate that. Or the easiest way is just to put it in the chat box, and we will kind of keep up with those and pause for questions as we go. So with that, we will jump right in, and kind of like I mentioned, the structure for today, we're going to talk a little bit about banking, because that's a really important part if you're thinking about financing your business, is establishing a banking relationship. It'll both in the short term and in the long term, it is really important. And then we'll jump into kind of preparing yourself for financing and some financing options from a loan and banking perspective. So with that, I think April, you're up.
All right, everyone. So the big thing we're going to talk about is kind of when should you begin that banking relationship. I always suggest to my business owners, as soon as you're ready to start accepting business or doing transactions in the name of the business, that you open up this account. So it's whenever you want to accept payments, do any transactions not in your name personally, you're going to want to open up that business checking account. This makes for clear accounting of the money that is being spent and earned for the business. And I cannot stress to you enough the importance of keeping clear records of deposits going in and debits going out. You want to have two separate accounts. Definitely want to have one for your business as soon as you decide that you want to get this going. So that's the first step, obviously, that we're going to tackle, is just opening that initial business account, when you should do it. So when you are ready to start transacting business in the name of your business, it's time to open up that checking account. The information you will need to have to begin this process will be your business name, business type, tax ID number, driver's license, and organizational documents. I've included links to the State Corporation Commission for you to be able to register your business name. This is so important because this helps you to take ownership of your business name. Having ownership allows you to use the name on loan documents, marketing, stationery, etc. Until this is done, the name technically is not yours. For sole proprietorships, this is super important because your business name is not registered any other way. I've also included the link for your tax ID application. It's important to know that before beginning the application, you will need to know what type of business you have, because applying for tax ID is not needed but recommended for sole proprietors. When speaking about business organizational documents specifically, this is your articles of organization for LLCs or your articles of incorporation for corporations. So the key thing is that when you go in there to that bank to set up that appointment, you're going to need these items on the screen in order to get it established. Does anybody have any questions about that at all before we go to the next part? We're good. Okay. So why would it be important to open an account? Obviously we're going to, the reasons right here we say are keep your business and personal banking separate, clean and accurate bookkeeping, prove your business is not a hobby, professionalism, and build a business relationship. So to kind of go on that point is that now you've gathered all that stuff and you're still thinking, why should I do this? What's the point? I have my credit union bank account that I've been using. How is this going to help me? Again, keeping your business and personal banking separate is super important. There isn't a way to accurately know what is being spent or earned on behalf of the business without a clean paper trail. This account is your clean paper trail. Prove your business is not a hobby. If this business is something you want to see grow and be successful, invest in this first step. Get those checks with your name on them. Accept credit cards into account in the name of your business. When someone wants to pay you, have checks made to you, not your business, to your business, not you. No one is going to take your business as serious as you are. So set the tone for how you are seen professionally. Most important, it's time to start that business banking relationship. And that kind of goes into Brian, who will kind of elaborate what you should look for in a bank as well as a banker as well.
think it's the next page here with some scrolling.
There we go. All right. Some of the real keys we're going to touch base on is why is it important to have a relationship with a bank, but also a loan officer or an individual at that financial institution, and the assistance that they should be providing you. One of the things is do your research. You know, banks are a little different from time to time, and the way we look at things, just to be real honest with you, you know, you can always ask your peers, other people that are in business, as to who they've worked with or had an experience with. And if you're satisfied with your present bank on your personal side, it's always worthwhile to have that discussion with them too. Like I say, some of these services and products are different between financial institutions, and I think you'll find that as you look deeper into what you need for your business. We'll go to the next slide. What should you look for in a banker? And I'll say, you know, let's just not call it a banker, but make a business relationship. It's not a one-time meeting between you and your banker or whom you're working with at your financial institution. It's a relationship that needs to continue. They're personal. If you really think about it, when you're speaking with your banker, it is a personal relationship. You've got to find a common ground to become friends. Hopefully that in that process, you get to know each other a little bit better, and you also can rely on that individual as a trusted advisor. Meetings face-to-face are very important. I can't stress that. You know, in this time, emails, things like that are used consistently, but for us as bankers, we want to see individuals face-to-face because of that relationship that can be built. And if you've got a business with a location, you've always heard, I need to go see you so I can kick the tires to make sure it's exactly where you say it is or what you're doing. So those are some of the real things to look at. Some of the things that relationship should have. We should both understand the specifics about our expectations. What are you expecting from me as your banker? What we're expecting from you as a client, whether it be just on the deposit side or whether it be on the lending side. So we need to set some expectations, and everybody needs to be on the same playing field as to speak to that and be part of that process as an understanding. Communication is important. I can't tell you how important that is, from the good things and the bad things. There have been relationships that may hit rocky roads. We're having that right now. You know, we need to be honest with each other and say, I'm having a challenge with making this payment, or my sales have dropped off. What can we do? So we need to have those open conversations as a relationship, as important as for you and the bank, because the bank expects to get paid back. But if we know there are challenges at that time, we can address those with you to try to help you talk through those things, as well as look at opportunities within the bank to either do deferrals or modify loans, things like that. As a trusted advisor, your banker should be looking at your financials. And this could be not just once a year. And I know Rebecca and I've talked about this, and with other people, is that your trusted advisors really need to be your CPA if you're using one, or your bookkeeper, and your attorneys and your banker. Because we may see things when we look at financial statements that hopefully will help you understand some of the things going on in your business, cash flow, balance sheet, all those things that, you know, are important to you as a business owner. Your relationship always needs to be open. Like I say, you know, the good things and the bad things are very important for us to help you. And one of the things I know that, having taught at CIC and other things, that I can tell you on the front end is that managing your personal credit and your business credit are very important together, because in a lot of situations you will find if you have handled your personal credit in a good way, your business credit will be easier to obtain and also be looked at from that standpoint. So I think that what I'm trying to explain is that in choosing your banker, you ought to find someone that you can rely upon to not just lend you the money or open the account, but have truthful and fruitful discussions on the good and bad things, because that is why that relationship is built, to help you in your business and move forward. Because the best thing that we can say, just like April did, is see you prosper. You know, if we can help you provide to your financial security and also your ability to grow and become stronger financially, that's what we're in the business for, in that perspective. I think we could probably go to the next one. How do you know your financing needs? Stephen, I think you're going to jump in somewhere here too.
Yep,
on the,
I will. And just to pause there for a second in case there are questions related on the bank, but and also to add something just on personal experience. Think about how many relationships that Brian and April have, you know, through their experience, you know, as a banker. They interact with so many businesses and individuals from across the community. So as you're thinking of challenges you're having, keep in touch with the bankers, because it might not just be about your financing needs, but hey, I'm looking for an accountant, or I'm looking for someone who provides this type of service. They interact every day with lots of different folks, and that could be a really valuable to you to be aware of that, or to kind of get some insight into another situation that they might be able to offer. Obviously, not sharing confidential details, but just awareness of what's happening in the community and the economy. So bankers interact with a lot of different businesses. So don't just think of them as that transaction that you need for your accounts, but also that person who can help you stay ahead of situations that you might get yourself into. So if there are questions around banking or kind of some of the things they hit on, please share them in the chat box. We'll continue on, and we'll come back with lots of questions at the end as well. So shifting from the banking to, like, how do you, if you're thinking you're going to grow in your business, whether you're starting, here, before I jump there, there's a quick question. I think we use Wells Fargo for a minute, but don't have a personal relationship. Is there a case where you think you might have two banks you work with? Would you open two accounts? April or Brian, you want to hit on that?
I'm going to take a look at the question one more time. Just give me one moment.
I'll go to the chat box, so please bear with us.
Sure.
Yes, ma'am, definitely. We have a lot of our customers that do that as well, where we are not necessarily their primary bank, but we handle different aspects of their relationship. Some people like personal and business accounts at different institutions just for a security aspect as far as handling their finances. Just because you have a bank account at Wells Fargo doesn't mean that you can't bank somewhere else. But the thing though about it is that you should have a personal relationship with them. You should walk in the door and somebody should know your name. Somebody should know what's going on with your accounts. You know, and that's one thing too I would say about First Citizens that I love, is that when you walk in, I know all of my customers and I have a personal relationship with you. Regardless if you have $5 in your account or millions, you should feel valued as a customer as soon as you enter that door and as soon as you leave. So the fact you say you don't have a personal relationship, that's a big thing that you may want to look at, because just as your business, you personally are going to grow. You're going to have, you know, changes within your family, changes financially. You're going to want that new addition to your house. You're going to need that new car. So you're going to want that person that is your banker. But most definitely, back to your question, you can definitely have more than one account at different institutions.
Just to add a little bit there too, I've always heard the adage, you don't want to put all your eggs in one basket. A lot of people may have heard that before. You know, it's probably a pretty good adage to think about. One of the things I will strongly suggest though, in having a relationship, sorry, my phone's ringing and I can't mute it. But one of the things that in having a relationship, both a business and a personal relationship with the same bank, you can sometimes build on some of those special services that are offered by that institution, both business and personal, vice versa. With respect to the items that are offered online, you can a lot of times marry your personal and your business to see it on one online package instead of having two. But there are times where you want to have separate banks, but there are times where it's beneficial for you because of the services and the pricing to have all the accounts with the one. So you just need to investigate a little bit further, to be honest with you, and see what best works for you. So I hope that's helpful.
And Brian and April can correct me if I say something wrong here, but our current environment and COVID and the pandemic is an example where having more than one banking relationship has been beneficial for some businesses. Certainly with the Paycheck Protection Program loans and so forth that you heard about, some banks shut down the program earlier or prioritized existing customers. And so if you had been an existing customer, that could have been you in those cases, and in some cases, it just made it easier because you had someone to talk to as opposed to just navigating an online portal. And so it really is, I think the pandemic has taught us some lessons on a lot of fronts where, having existing relationships and planning ahead on some things can be really beneficial.
For sure. And, back to the Paycheck Protection Program, we had, obviously we had a big flow of applications coming at one time. And as a banker, you do what's best for your customer. And if I knew at the time that First Citizens, if there was somebody I felt like really needed that help and, to be able to get that money, we made sure to refer them to a smaller local bank that was going to get them done. So regardless if we couldn't get them done here, I made sure our customers were serviced outside of the bank, because at the end of the day, it's making sure that your customer and your person is taken care of. So yeah, you're definitely correct in what you're saying.
Good point, Stephen.
Yeah, well, continuing along. So have your businesses starting, get your bank account open, establish that relationship, make sure the banker knows where you're heading. Part of where you're heading, hopefully, is in your business plan. And to know what type of financing you're going to need for your business. Whether you're starting or whether you're growing. So I'm trying to grow and move into a location. Am I going to need $30,000 or $50,000 or some amount of money to build out the location, to get rent for those first couple of months until I get the sales started, to train new employees? That is all things that come into your business plan. And we're not going to dive into how to do a business plan today. And we'll come back to that question in a few minutes, but we won't dive into how to do your business plan today, but you should know that the business plan, first and foremost, you should do it for yourself. It's a matter of doing the legwork, doing the research to figure out how much things are going to cost, what your model is, how much you're going to be able to sell, and then figure out if the business worth doing to you. Every individual can look at businesses and make different decisions because we have different values. And your business plan can help you decide if the business is worth it for you. So if your business needs to support you so that you can leave your day job, how much do you need to sell and how do you get there? And you're going through the steps of developing your plan can help you figure that out. As you start to grow, you can actually track your progress and know how you're doing along the way. And so the question that just popped up, a business plan, something that you update continually, I think it certainly is. Especially, you might not update, every month your marketing strategy because you have to wait for it to work, but you should be updating your cash flow and your financials, each month so that I thought I was going to have 1,000 customers in my restaurant last month, and that would have made me, 50,000 revenue and 5,000 in profit. And did you hit those numbers? And so being able to update that and then kind of adjust as you go is an important piece because businesses are always changing. I know a number of people in the last 6 months who have changed their fundamental business plan almost every month because of the pandemic, because they've had to adjust to, not only being able to do, like just using a restaurant example, only doing takeout to maybe doing takeout and people eating outside, to doing some catering. Businesses have had to adjust a lot, and hopefully we don't repeat this time in history, anytime soon. But it is a case of constantly updating your business plan, and those who are aware of it and can adapt to it the quickest will most benefit. So,
and if I could add to that, going through the course of updating just your cash flow or your projected income and expense lines will actually cause you to look at the different aspects of your business. Have things changed? Do you need to do something different? So if you, at a minimum, want to look at your numbers, that really helps you keep your business plan up to date.
Absolutely. And with that, with the numbers, if you're not hitting the revenue that you need, because you needed 1,000 customers and you had 800, then you revisit the marketing part of your plan. How do you get those next 200 customers in? So they all play together, and the more it's written down, the more you have something to review to know if you're actually doing what's working, if you're actually doing what you said you would, and if it's working. So the business plan, first and foremost, is for you. Regardless of whether you take anybody else's money, you are going to use your plan to make decisions in your business. But if you're needing money to grow your business, you're going to be asking for it most likely from someone else. And those kind of two broad types of that, and that's lenders or investors. And a lender is still an investor, but just you're either borrowing money for someone or they are investing in your business hoping to get a big return or a return over time. So with lenders, your business plan needs to tell the lender, if you're looking to First Citizens Bank or CIC to borrow money, they want to know, how am I going to be repaid and when will I be repaid? And so in your financial projections in your business plan, it says that, I can afford, if I borrow $35,000, I can afford a $600 or $700 loan payment every month for 5 years to pay it back. And you need to have that much money left at the end of every day, or week or month to be able to make those loan payments. Similarly, a business plan for investors is they're wanting to see when and how much return will I see. So with the loan, it's usually the interest rate, exactly how much it'll cost you if you pay it on time. But investors are looking, well, I'd like to make more money, over time. In most cases, every investor is different. And so your plan has to be built. So I might be willing to lend you or invest in your business $50,000, but I am willing not to get any of it back for 1 or 2 years, but then I want to start getting some of it back over time, and I want to make money off of it. So how is that going to work? And there are infinite different ways for how that can work. But the plan is built on what's going to make you most successful and what our investors are willing to do with you and your business. We're going to focus a little bit more today on lenders and loans, and then a few other kind of investment and financing opportunities will be in part 2 next week. But the business plan component is the same for either. It's just a matter of how you're demonstrating it. So are there other questions about the plan before I continue along? Feel free to throw them into the chat box if you have them. So what are lenders looking for? And Brian and April, feel free to jump in at any point here. CIC is often also a lender, so and we look for largely the same things. It's just we kind of approach it slightly differently. Brian already referenced this. What's your personal financial situation? There's a few different reasons for this. One, what is your monthly personal income and expenses? Because from your business, if you need to make $3,000 a month to pay rent and support your family, the business has to be able to generate that for you. And if you're single and you're the only person you support, then and there's no one else who's providing funding for you, the business has to provide all of that if you're full time. So that's a really critical thing that we want to know and want to see that you have a handle on. Yes, you may want to make $10,000 a month because you want your business to make you wildly successful, but you have to make $3,000 to cover your bills, and knowing that difference helps build both is important for you and builds confidence for the whoever is lending you money to know what you need to take out of the business. Second, credit history. If you haven't already, I highly suggest you get your free credit report. You know, you can get it free and from websites all over the place these days that can tell you what your credit score is and also see what your credit history is. And lenders are looking at your personal credit because even though you're a business and the business might build some credit itself, you're the owner, and your history, your character, and how you act affects everything in the business. And so if you have a personal history of paying your bills and your debts on time, that is likely to translate into the business. And so that reflects in your credit history, and that's why why it's looked at pretty heavily, especially for small business owners. So in general, like 650 credit score is where you need to at least be to start. You know, most banks that I'm familiar with won't lend much if you don't at least have that. Getting to 700 is really a much more solid place. Usually 650 means that you pay your bills on time each month. You're not behind on any debts. You might have some debt, and you might have some things in your past where you got behind, but your more recent history shows that you're on time. The number one thing you can do for your personal credit is any debts you have, pay on time every month. That doesn't mean like you can do only the minimum payments if you have to for a period of time, but don't ever miss a minimum payment, because that can really ding your credit and make it harder and more expensive to get other types of credit along the way. So the personal financial situation is really about how much the business is going to rely on you for income. If you can keep a day job and grow a business, that means you don't need to take money out of the business. Also means that lenders are going to look more positively on that as that you are a lower risk in lending to. Most of us aren't in that position. We need to make money from our business each day and each month. So we need to do it. So knowing how much and kind of being disciplined in your personal finances is really important. Next up, what is your business situation? So this is what we're looking at: your business plan and at the history of your business. So in general, it is much easier for a lender to make a loan to a business that's been operating for a longer period of time. And that's why in many cases, and Brian and April, please jump in here, it is harder for banks to lend if you haven't been in business for 2 and sometimes 3 years. Because they're looking for that history that you've been successful in building the business and stable and paying your bills and have more money left at the end of each month than you started with, which means you have a little bit of ability to afford a loan payment. And so in that history helps you show that people want to buy what you're selling. So whether it's a store and you have people coming in, or it's a product and you're distributing it to different stores all over, or a service and you're delivering that every month, are people actually buying what you're selling? That makes it harder to lend to very, very new businesses, especially the brand new businesses. It is harder to get a business loan if your business is brand new. It's not impossible, it's just harder because you haven't proven people that you can operate this business profitably yet. You've made a plan for how it could happen, but you haven't proven it. So yeah, I will pause there for a second. Brian or April, anything you want to add just kind of in this at the moment?
I think that's very important to take away from this, that in a lot of cases, you have to show a track record to get a bank loan to grow that business, and or show that, you know, you've managed your personal credit. There are times when you talk about security or collateral, if the business fails, the bank is going to look at that to secure that loan for that very aspect of, You know, this money's loaned to you, it's expected to be repaid. If not, how does the bank get paid back? That's sort of the real key of those important factors. One of the external factors, if I can jump on to Stephen also, and where the importance is of having a relationship with a financial institution that can help you as an advisor, we use something called Vertical IQ, and I share it with my clients all the time. And what it does, it pulls information off of many networks to show what is going on in the economy directly related to that type of business. It uses the national code, the CS code, so that then you can pull information on that particular business. You can also look directly at other businesses like yourself that are in the same type of business. So that's just one of the things too about why it's important to have that trusted advisor in a financial institution or a banker, that individual can help you look at what are other businesses like myself doing? How are they getting financed? What type of financing do they need? So I think that's one of the external factors I wanted to just address there also, Stephen, while we were talking on that, and why it's important to have that relationship.
Absolutely. And there are other resources that come with it, as Brian has referenced. Other external factors, obviously, again, what's on all of our minds at the moment, the economy is, struggling because we're all trying to, fight this pandemic, and to do so, that's making it harder for the economy to work the way we all want it to. And so at the moment, I know that CIC, and I would imagine banks, it is harder to do loans right now, in this environment, because the uncertainty about what's going to happen with things. Doesn't mean it's impossible, and relationships and history can make a big difference there, but it is a fact of life right now. That doesn't mean you shouldn't pursue what you're working on and shouldn't keep working at it, because things will get better. And so it's just a matter of setting yourself up for success, but being realistic about where things are. Right now would be not a great time, especially say in the next 3 months, to launch a restaurant because the volume you're going to get is really hard. It was really challenging to acquire. Brian referenced security or collateral, and just to kind of give people the background on what that is. So, if you were to buy a house, if you don't make payments, the bank can take the house, right? So that's the security or collateral against making a home purchase. In a business, especially the very small businesses, it is much more difficult to have collateral, because you probably don't own the property or the building if you have a store, so you're renting it, so they can't, the equipment that you purchase in your business sometimes doesn't hold its value very well, so it's harder to resell. So banks in general often look for, or the general rule about lending is if I'm lending you $100,000, there should be $100,000 of collateral that I could collect if you weren't to pay. And sometimes you might be able to get, say you bought a $100,000 piece of equipment that as soon as you start using it, it's probably only going to be worth $40,000 or $50,000 that, if you're lucky to be able to resell it. So that means you don't have another $50,000 in collateral. Sometimes sometimes cash can be used as collateral. So if you had part of the money, you could secure it to help you borrow more. Sometimes I would not necessarily recommend this, but there have been business owners who owned a home and have put up part of their home or a mortgage on it. Like, it's not a recommendation, but that is another form of collateral. And there are often other places you might be able to do it, but that is often one of the things that can make it difficult to get a loan, is not having collateral. But that is what lenders are looking for in most instances. So this is the general of what lenders are looking for. They're kind of continuing at the next slide, Anna.
Stephen, if I may add one other item into that whole process, going back to personal credit, that is very important. You may or may not have additional income. So personal credit and just how you've managed that is real key through this whole process. Also, outside of the collateral or security side, there are the opportunities to have a co-maker or a guarantor in some of those instances. If you don't have that hard collateral, whether it be cash securing a loan or real estate or equipment, you may not have all that. There are opportunities to bring a co-maker or a guarantor to the table that may have the ability to show the bank that there is outside cash flow if you are to miss a payment or if you were to have some problems. So I'll just bring that up too, that those are some real possible scenarios that you can look at.
Absolutely. You know, having a co-signer, you know, family member or someone who's willing to kind of help you get to approval can be a real bonus in a lot of situations. So there's a question, our company is an LLC partnership with 2 owners. Are lenders looking at both parties' credit history and personal income versus expenses, or just the history of the personal income of the individual applying?
The case there is going to be, we would be looking at the company itself as an LLC, but also the individuals, especially in the case that they may own 20% or more of that entity. And in this case, you'll have members and managers. So you'd have to look at the organizational documents to see just how the ownership is. But we would look through the business, number one, as the ability to repay, but secondarily be looking at the credit history and personal income of the individuals also, because in most cases, if they are owners of at least 20% or more, they're going to be asked to be on the note as a co-maker or guarantor. So I hope I answered that question for you.
I think that when we see that a lot, so then Brian, as he said it, I think is a good way to keep in mind. Your business is the one seeking the loan, and we want to make sure that the business can afford the loan payment first and foremost. But if the business can't afford it, we want to know that there's a person that can back it up. And if there are more than one owner, especially who's owned more than 20% of the business, we would be looking to say each of those owners with more than 20%, can any one or more or multiple of them afford it? Because that just makes it more secure for the bank or an institution to lend to you. So that's kind of the layers. The more places that you can show that the payment can get made, business, personal, collateral, the more secure the loan and the stronger the case is for doing it. So you want to go back to the next slide, Anna? And so getting your business loan, kind of what type of loan would you need? You know, that's often a question that you might not know or think much of, because there are different types of loans in a situation. There is kind of the standard kind of term loan that say I'm buying a piece of equipment that I can use for 10 years and maybe I take 5 years to pay it off, you know, and so that you're buying equipment and you take 5 years to make all the payments on it because you can't afford it at one time. And then there is lines of credit where it's almost like a credit card where you have access to it because you need funds at different points. And then there are lots and lots of other different types of loans. Brian or April, do you want to kind of give a couple of other examples of like different types of loans that folks might be looking for?
I think we certainly can, and I think that even next week's going to dive a little bit deeper into that with Rebecca, and we do this again. I think the type of loan really is going to really need to match the asset to that loan. And like Stephen was saying, a term loan, if a piece of equipment has a lifespan of 3 to 5 years, you want to match the repayment. If you have receivables or inventory, those items should be turning into cash. So it may be a more short-term loan unless it becomes a long-term need. And I think that's where you need to just have that discussion with Stephen at CIC or a relationship banker like myself or one of the other people. Just what type of structure do we need and match that to the asset. So I think that's sort of how we would sort of relate to that right now.
For sure. And then, you know, to even see if you necessarily need a loan, because most businesses, I recommend getting something called a capital line.
You're muted. I think you accidentally muted.
Okay, there we go.
Sorry.
Most of my business, I do recommend getting, you know, a capital line. That's something where you can use it as working capital, you know, to cover payroll costs, to cover, you know, expenses that come up with the business. You know, and sometimes it's not necessarily a loan that you need. It's a revolving line of credit. You know, it's a credit card. It's an auto loan. There are a couple of different options that we can offer the business. It's kind of, again, having that relationship and you kind of telling us what your needs are. And depending on the product, you can get different interest rates, different repayment plans. So it's kind of first determining what your immediate needs are and how much you can afford for that loan payment.
Great point. And so I think that's kind of back where we're saying the business plan is, what do you need the money for? You know, is it to, you know, if you're getting started, is it because you're buying a new piece of equipment, expanding into a new location? You know, what are those things? And is it, and it's just to kind of reiterate something Brian said, is it a long-term purchase or is it a short-term purchase? You know, like if you're buying inventory for a store, you want that inventory to sell hopefully within 30 days, unless depending on what type of store you have. So you don't want to be paying for that inventory for a long period of time. You want to pay it off when it sells. And so, but you might need some money, especially say at the holiday season, to increase your inventory so that you could sell it and then pay it off in January. So knowing what the financing needs are, your business is really important, and how you plan to use the money. If you can come in knowing what you need the money for, then any of our institutions can help you figure out kind of what's a good structure for it, especially if you're not familiar with all the different types. Best places to apply for a loan, I would almost, in every case, say start with where you have an existing relationship, you know, because they know you. You know, the easy thing about any bank is that if you're banking with them, they can look right at your accounts and see what's the revenue coming in, the expenses going out, you know, are you managing it well? And that's a good starting point. You still have lots of other work to do, but start where you have the relationship. If that is difficult because either you don't feel you're treated well or you, you know, aren't a good fit for them for some reason, start looking at other banks and so forth. I would always recommend starting with a traditional financial institution, because having that relationship is really important over the long term. But if that doesn't work, you know, or if there aren't an immediate place for you to go there, that's where you can look into some of the alternative lenders. And I'm going to come back to let First Citizens talk a little bit about what they're best suited for. But CIC, we have a microloan fund. We offer loans of up to $35,000 currently. And our goal is if you have trouble accessing a bank loan, then come to us. And the cases where we see people have most trouble is either if you haven't been in business 2 years, then chances are it's going to be more challenging at a bank. There's no universal rule in any bank, so still check with them. But if you've been in business at least 6 months and have been selling, and we can see a history, you can apply for our loans without participating in any of our other programs. If you are a brand new business, then we would encourage you to participate in our 16-week workshop. And being a graduate of that makes you eligible to apply for startup loans through us. But if you haven't gone through our 16-week program, then once you get to the 6-month mark, and that 6-month mark, honestly, we let people apply who are still very part-time, but we're looking for history that people are buying what you're selling, and that you have figured out how to sell it profitably, at least on a small scale. And then we might be able to help you take that next step to scale up from very part-time to a location or a new piece of equipment for efficiency, with the goal of getting you growing over those first couple of years and building that history, so that then once you've been in business 2 or 3 years, if you're still having, if you need more financing, you are more ready for a traditional bank. And then The other things where we see banks or where folks beyond the 2 years in business, if you've had some trouble in your credit history in your past, so maybe you're not quite at 650, but you're working hard to kind of dig yourself out and to establish better payment history and so forth, but it takes time to do that, come talk to us. If we can see that history that you're not taking on lots of new debt and not paying it in the last, say, 12 months or so, and then you have the other pieces of your business in place, we can often work with you to try to figure out how we can help get you there. Not to mention we can help connect you to other resources for either credit counseling or planning to develop better credit over the long haul, while maybe still getting some of that initial financing you need to kind of take the next step in your business. But the bigger piece of advice I have in all of that is, you might think, I really need $30,000 or $50,000. And depending on where you are, you might only be able to get 10 or 20 to start. And if that's enough to get you to the next step, maybe not the next 3 steps, that's a great way to kind of move yourself forward. So for CIC, it's really, either existing business that's been operating for 6 months or someone who's been through our 16-week workshop, are the kind of 2 minimum requirements, and then come talk to us. We'll often ask you if you've talked to your bank or along that way. So that's a little bit about CIC and who they're best suited for. Brian, do you want to jump in on First Citizens and where you can most help?
Be happy to, Stephen. I think you bring up some very good points, and that is using the advice that you've got at the SBDC or through CIC, or your relationship that you're building with your bank. Sit down, have those discussions and ask those questions, because that's what we're all going to try to do, through this facilitation of this workshop, but trying to help you. What options does First Citizens Bank have? There are an awful lot of options out there. I will certainly tell you that. I think we'll delve into some of those a little bit deeper, but there are lines of credit, there are term loans. We are a preferred lender with the Small Business Administration. And if you look at the website for Small Business Administration, the 7A and the 504 loans are very well suited for a lot of businesses. And we will help people walk through that process, because in a lot of cases, depending on the amount of equity you have going into that purchase or the time frame that you've been in business, those options are available to you as a small business owner and are very important to you too. One of the things that I'll point out, that when you're thinking about credit, and again, we're going to talk a little deeper, a business Visa card is a very important piece of credit. That American Express card or that MasterCard you may be using is a very important piece of credit and can be part of the whole picture for you. As a package. One of the things that we're bringing to the table that's a little different from some other financial institutions that will sort of help people with their personal credit, which relates back to business credit, is a secured credit card. And what this is basically is an individual can put some cash back, but then get a credit card against that. So that then helps them bring that credit score back up. And we've seen that in a lot of situations where people may have had a medical bill or problem, but if they just have that next foot forward with something like this, they can rebuild that credit. What information will you need? If you've been in business a while, you'll need financial statements, whether they're tax returns or account prepared documents. That's very important. You'll need your personal tax returns if you're an entity where we'd be looking for you to be part of that credit process. And if you're a 20% owner or more, that's going to be requested. I think one of the things that was brought up earlier, your business plan, and just knowing where you are. We've seen with the pandemic that people have had to change that. Where are you headed next? Those are some of the things that are needed too. And that is where you sit down and you talk to someone face to face in a lot of cases, or email if you have to. That is sort of the things I'd like to sort of just throw out there too. but there are an awful lot of options out there to discuss, and I think that it's the best way to find out what really meets your need versus putting you into a specific product without knowing what that need is. So that's why I'll sort of end with that. Yeah, I think it's
And you just a question you just mentioned, Brian. Do you suggest a secured credit card for someone who'd had a bankruptcy within the past year?
yes,
100%.
yes.
A couple other questions. There are a lot of forbearance situations right now because of the pandemic. With those like missed payments,
No.
with those like missed payments to you, I'm just sure if I kind of got that. Well, I guess would those missed payments hurt you, I guess was the question. Alicia, do you want to clarify? You have it. You're welcome to unmute if you need to.
Yeah, you might want to clarify that question.
What would they look like? What would the
I missed a word. Look like.
gotcha? What would those missed payments look like to you? Like as far as if I'm looking at your credit?
Yeah. So like I haven't had to pay my mortgage since March. And so, I don't know if that looks like a missed payment. And then I also have another loan that the very first payment happened to fall right at the very beginning of the pandemic, and they happened to offer relief, and I accepted it. So what do those situations look like? I mean, do those, I don't think they affect credit, but like if you guys see them, does that make you less likely to get a loan?
No, the main thing I was just suggested just documentation. When you accepted the forbearance or the relief, there's documentation piece in there. So, and I imagine with your forbearance, they're probably going to put it in the back end of your mortgage. Probably they've restructured it for you, which this is a common thing. This is all new territory we're all going through with everybody. But I would tell you that even if we weren't going through the pandemic, if you, for some reason, went through a medical issue and had a forbearance, those things, as long as your communication with your institution, they're not going to negatively impact you on your credit because you're not paying by choice. There's something impacting your ability to pay at this time, and you've had an open line of communication. So, I mean, that's a great question, but yes, I mean, we're going to continue running into that, but as long as when those payments came back up, you take care of your liability at the time, then you're going to be good to go.
And one honest thing, we do not know, I don't think yet, how those things are going to be reported to credit bureaus.
Mm-hmm.
So that is one of the things that I think will be coming up, is how are those items even reported into the credit bureau. But April is exact on. Honest opinion, showing what you have is going to be the real key there. Having that open discussion.
And as a general advice, when you have offers for forbearance and other things, please talk to someone about it if you don't understand them, because sometimes forbearance means it's tacked on to the end of your mortgage, and sometimes it means you owe 3 months all at once and 6 months from now, or something like that, or you have to catch up by a certain period. So just making sure that you understand what the terms are can be really important, so it doesn't hurt you like when it's time to catch up, basically. So that's a good thing. There was a question earlier that I'm coming back to. Should you open the business account at the same bank as your personal account to build a relationship?
I think that's a fair question, and I'll go back to early on. If you've not had a relationship with that bank on your personal relationship, it is worthwhile to sort of look out there and see what's available to other institutions, because as you build that relationship on the business side and the personal side, there are more services that can be made available by building that dual relationship. And that's sort of how we look at that from that perspective. So I hope that answers that question.
Thank you. There was a question a few minutes ago. Do we offer the 16-week workshop online now? Our fall class will be online. Applications have closed for it, and folks will be notified into this week whether they were whether they're in for the fall. And so the plan for the moment is the fall is likely to be entirely online. And then for the spring, we will reevaluate and hopefully be able to get back to in-person, for our spring cohort. kind of related both on to our workshop as an opportunity and in general CIC and SBDC. As you're working on all of this business, it's come seek help. While you're applying with a loan through a CIC, we will still work with you to help you understand some of the things that you need to work through and provide some counseling or assistance to get there. And then the Central Virginia Small Business Development Center that we talked about at the top is a great resource if you're looking to finance your business, to put together your financing package and what it looks like. So kind of Rebecca and her team can help kind of start to finish on that front, especially if you're thinking of larger loans or that type of thing, and where there's even more to it. They can help you kind of prepare for it and kind of negotiate some of those conversations with the bank if it's helpful. Because sometimes we'd certainly appreciate that, having someone who, like, having those conversations with the bank at the beginning when you're still nervous about it, having the counselor who's, you know, can talk you through it first and then have it with the bank can be more comfortable and help you just feel more prepared. With any loan that you're going to apply for, one of the last bullets, when I say what information will I need? So one, business plan and some financial projections, financial history for your business. We highly recommend, if you're already in business, that you are kind of doing proper accounting and keeping good financial records so that you actually have a profit and loss statement and a balance sheet, because that just creates more confidence with the bank on what's happening. Even if you have a bank account with them where they can see it, just the bank account by itself and those transactions don't always give a good summary, and those financials are really critical. So if you're going to be seeking financing, work with an accountant, kind of keep really good records, and then have the records that you keep match, you know, what's in their bank, you know, because that's the other thing that we're looking at is, you say that you made $100,000 last year, but your bank accounts only show you, you know, maybe made $50,000. And so that's that kind of double checking that we're doing to make sure that the application things that we're seeing are accurate. We're going to ask for your tax returns as evidence of, you know, the business and what's going on with it. One piece of advice with there is it's really important that you report all of your revenue, that you do it properly. And I'll just give an example without naming names. We worked with a seasonal business a few years ago that applied for a loan, and they had a lot of cash transactions, and the owner he was upfront about it, didn't report them all. One, that's a red flag to begin with, you know, that he was kind of nonchalantly sharing that. But two, when we looked at the business, if he had reported all of the revenue, then it made it look like he didn't need the loan because he was making so much money because of the way his financials look. So that kind of created some question marks for us. Does he really need this loan? He's asking for $15,000 and it looks like he made $70,000 last year. He could just reinvest himself back into the business. And then the way he underreported all of the sales and the coming in that weren't on his tax return, it made it look like he couldn't afford the loan payment. So being honest and which I believe everyone should be, but keeping good, accurate records to confirm what you're doing builds confidence with any lender or investor that the business is operating at the level that you say. Not to mention the other thing beyond lending that's important. If you ever get down the road and want to sell your business and you underreport some things along the way, then if I'm a buyer of your business and you say you sold 200,000 but you only reported 100, I'm only going to be willing to buy the business for $100,000 sales, you know, because I can't, you know, you're not proving that you had that more. So I'd really recommend keeping those good records and reporting things properly. So you need your tax return, your financial statements, your business plan. If you're applying with the loan through CIC, we're going to ask for your bank statements because we're not a bank and we can't, you know, access. If you were banking with First Citizens, I would imagine they could look at your records directly or get permission to do so in a loan. But if you're applying with any other institution, you might need to supply those as evidence. And then there's likely to be other things that you would apply when you open any bank account, but those are often the core pieces that we're looking at. Brian or April, want to add anything? say that?
I'm trying to look at the information you're talking about is very important, Stephen.
Sure.
And, we're in the same ballpark with you on that type of information. I think we see one chat in here, does the bank charge more than a business loan or personal loan? I think the answer to that is really what type of need you have with respect to that. And it's what type of loan facility we would say, whether a term loan or a credit card or a vehicle loan or a line of credit. It's going to depend a lot on that, as well as your credit history, and also on what you may have for security for that loan as to what interest you're going to pay on a business or personal loan. Okay.
Sure. And then, the question about filing for bankruptcy in the past, does it affect the startup of a new small business? In terms of filing for bankruptcy, of course, credit, we talked about personal credit and how you're handling it and everything. I think it does definitely impact you, but as Stephen was talking about, is that this is the only opportunity to grow and try to work towards making that better. So getting that Share Secure card, showing that you are going to start making your payments on time, and people have financial difficulties for whatever reason, doesn't necessarily mean that you won't be successful in your business. It may be a little harder for you to get started, but don't get discouraged. You're going to have to kind of get innovative, with how you're going to plan to do this financing, and definitely I would suggest investing in yourself and investing in your business until you can get that loan. Try to buy your products, buy, maybe less expensive ones, but still get it done, invest in savings for your business. I mean, anything you could do to prove that you're taking this seriously is definitely going to help you if the credit is not there. If you're coming to us saying that you have, $10,000 saved, or if you have these customers that are ready to purchase from you, if you're showing a track record of being a good business and putting your all towards this and working towards get good credit, you can only help yourself around your credit.
There are specifics that we will follow, and the SBA has their own about having filed bankruptcy, but typically it's 5 to 7 years with respect to that. Like I say, there are certain circumstances that are outside of that, especially in the medical side, that have been taken into account. So I hope that answers that question.
For sure. And then, like as Stephen said, that they do help out with people, I believe you said at CSC, that do have sometimes credit issues, and help them with that. And like you said, there's credit counselors as well.
And for CIC, please, if you filed a bankruptcy within the last 1 to 2 years, we would probably say, you need a little bit more time to kind of grow out of it, and before we would look at a loan. I never say never, but it's just that more recent. If it's more than a couple of years ago and you've had on-time payments and have not dug the hole any deeper since bankruptcy with your credit, then we'd be willing to work with you based on the business and kind of other parts of your situation. If you have credit challenges, that's the other place is, if you have others who would be willing to co-sign with your loan, that can also help alleviate some of the concerns with any type of credit challenge as well, because that would be another person who's willing to kind of share some of the risk with you. So that's another opportunity. Another question was, how much cash money should I have for a loan of $35,000? For CIC, we don't have hard collateral requirements on our loans. We obviously want collateral whenever possible. We have not done a loan where we've had cash collateral in the past. We do look for any person who's borrowing and looking to grow their business, that you're personally invested, that you're not entirely reliant on our money to kind of get where you need to go. We know that if you only have, if you don't have, say you had $2,000 in savings and you're looking to borrow $35,000 and you had the case for getting a $35,000 loan, we would look that you're investing some of your savings in it, not all of it, because that savings is really important for your security as well. But we want to know that you're taking some risk too, because we're not the only one taking a risk, on the business, that you're willing to risk some yourself as well. Brian, I don't know, if I think it's just largely, I don't know if you have an answer that would be different or additional for that question.
Not really an answer that's different. I think trying to answer that, you really need to know what the need is for the money.
Mhm.
Is it just for working capital? Is it necessary for a piece of equipment? Or is it for some improvements to the property that you're in? Sort of knowing the need for that's going to be key. And you're exactly right. We're going to want to see that you have some capability to put in some cash into that. Say it's a $35,000 purchase of a vehicle. We may want to see 20% down, which is $7,000. So each case is a little different, and that's why you sort of need to have that discussion on the front end. I hope that answers that.
Yep. And for any loan that you're seeking, or once you know what you're needing funds for, say you figure out to grow your business to the next level, you need $100,000. You might not get that entire $100,000 from one source. You know, CIC, our current cap is $35,000. You might be able to buy a big piece of equipment. Say the equipment is $60,000 or $65,000. A bank might be able to help you with the piece of equipment, but the bank might not be willing to do some of the build out for your new location because you're renting it. And so the bank might do $65,000 for the equipment, and CIC helps with $35,000 to help build out the space because we're willing to do different things. And as long as the full $100,000 works that you can afford the payments, both institutions might be willing to kind of come together to do that. Same thing works when you throw into, you know, a credit card or some other type of credit that gets into it. You might often be putting together a package that includes more than one type of loan and even more than one type of more than one place you're getting the loan.